Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, so today we're going to do a market update where we have a big declaration to make.
Right. So normally I don't get excited about market updates, but this one I'm really excited about. They're kind of a snooze, I think, but this one I'm super excited about. So stick around. It's going to be so much fun.
Okay, we made a prediction 3 months ago.
Yes.
That the market may be coming to a bottom. Mm-hmm. And so this was November. We could be very close to a bottom in November. Oana made a very important quote on that video as to how we would know and the delay. And do you remember the roughly what you said on the video?
Something along the lines of, we won't know that we hit the bottom until after we've hit the bottom.
Okay, so I'm going to show you a clip from the video, and I'll put a link so you can watch the video. But here's the clip from the video.
Left with what's left over.
Is a general rule by the time you realize the market has started to pick up again, it's too late. Mm-hmm. But you've missed it.
Right. As far as those numbers becoming statistically significant, it takes a while for that to show up. So by the time that data shows up, the market's already turned.
Okay, Oana. So we won't know till after it's happened, but now we know.
We know.
And
Yay!
so we're going to go through a bunch of slides. We're going to show the data, and it reinforces exactly what we kind of thought we believed was happening at the time.
Okay, wait. Okay, so we have a date. So if you want, play along, put a comment down below right now and tell us when you think we hit the bottom in Vegas. I don't know about anywhere else, but in Vegas. So real quick, put your fun date down, and then we'll keep going, and we'll give you the date, and we'll see how close you are.
Okay, so we're going to do as we go through that, we'll reveal the date.
Yes.
But we're just going to go through some slides, and we're going to backtrack to the data for the last few weeks. Okay, so first one's the market action index. This is up from the last time we did it. This lags by a bit, right? Mm-hmm. Because it takes a while for sales data to actually come into play. But if you look at this next slide, this is the market action index over the last 3 years. The 7-day average, the 90-day average is 39. That's what you saw or 35. That's what you saw on the slide, 35 on the needle. The 7-day average is 42. That is not noise. That is signal.
That is crazy.
It's substantially, we're substantially going back to a seller's market. Mm-hmm. That's the first piece of data. The second piece of data is list prices, median list price. Mm-hmm. Okay, median list price, Friday, January 20th, hit the low, 483,995. Now, if you look back, it was higher, it was dropping. That's when we were talking about people decreasing their prices on their listings. Mm-hmm. But that's the last week it went down. It's gone up every week. It's 495. It's actually gone up 1, 2, 3, 4 weeks in a row.
Right.
4 Fridays in a row.
Right. So 4 weeks in a row is more than just noise. Now we're getting into a pattern. So that means that the spring selling season, the spring buying season is in full swing, and here we go. Okay,
so remember that number, Friday, January 20th. The other thing we're going to look at here too is inventory. Mm-hmm. Inventory on Friday, November 4th was 5275. This was just for Las Vegas. So forget Henderson, North Las Vegas, and outside Nevada and all the other stuff that's junk in the MLS. We're just talking about Las Vegas. It's 3348. It's 40% less, going quickly to half the inventory. This is extremely low amount of inventory historically. Extremely low. Mm-hmm. This doesn't happen in a terrible market, right?
No, not at all. And sellers aren't going in. We've talked about this for a long time. They've got these 2%, 3% loans, and until they have a very good reason to give up those loans, they're not going to.
Okay, the next chart is price per square foot. Now, if you look all the way over, price per square foot was pretty to the left. Price per square foot was even, 7 to 90 day. And then you saw the dashed line going above, which meant that the trend is for prices to be higher. Remember, this looks back about 2 months. It's about a 2-month wait before you see it, kind of a thing. That's one of the things Oana was talking about in the video. It takes a while before you see it, because by the time it happens, it's too late. It happened in the past, right?
Right.
And then you can see for the year and a half of run up, the dashed line was above, and it never once dropped below. It always stayed above, but then it dropped below, and it home prices declined, which is about 8% decline in Vegas, trough to peak. Year over year, if you look at the diamond, home prices are still up, right? Well, when you look at the 90-day average, they're exactly the same, which means it's going from below to above. What does that mean?
It means that we have turned the corner.
We've turned the corner on prices.
On prices. And
so what we expect to see is that over the next few months, for sure, more than likely, probably 4 or 5 months, home prices close prices will be higher.
Right. So Todd's talking about 4 or 5 months. This is really important because we are now in February. And remember, so homes that are selling over the next 3 months, at the end of that 3 months, they won't be closing until 4 or 5 months. So when we're looking at those numbers in 5 months, those are escrows that started 30, 45 days, maybe even 60 days before. So that's what we're talking about, all these numbers lagging. So it's really important to understand that because we're going to get to June and people are going to say, well, blah, 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 blah. It's like, well, yeah, that's because these higher prices are closing escrow right now, but they went into contract maybe in April or beginning of May. So kind of keep that in mind as we go forward.
Here's another chart of the inventory. As you can see, if you look back to about April of last year, the inventory started increasing. This is when people said, oh my gosh, housing crash. What this was just a lot of sellers coming on the market that were going to sell anyway, coming on early to try to capture the peak of the market. And but you can see it turned the corner in October and started declining. And you can see the trend, the 7-day trend is substantially below the 90-day trend. What does this mean for inventory for the next few months?
Inventory is going to start flying off the market.
It's going to fly. Homes are going to fly off the market. What does that mean for a home buyer who's out there in that really nice house in a neighborhood they've always wanted to buy in, comes on the market?
Jump on it. So 2 things. One, we're not expecting inventory to grow, you guys. Not enough to accommodate all the people who would like to purchase. So I'm not saying that you shouldn't be choosy, but I'm saying you should make your decisions understanding that there is a time constraint because other people are coming to market as well to purchase. So you don't have all the time in the world. We've said before that the best time for you to purchase was basically October, November, December, January. Those months have passed. Now you're going to have more competition. So when that right house comes along, go ahead and go see it. Go make your offer. Go put your best foot forward because you are going to start facing more competition. Maybe not this week, maybe next week or the week after, but that's coming because you can see prices are going up. So if you've got the right house, the right price, the right location, put your best foot forward.
I'm going to go. We did a video last summer where I predicted October, November, December, January would be the 4 best months to buy because you would have more choices of inventory. And it absolutely, when you look at that inventory chart, that's when the inventory was at its peak and it's been going away since then. This next chart, median list price, this follows the same as the other one. The median list price was higher, trending higher until last June. It declined. Remember, this is median list price. This is not the actual sale price. And then that bottom number, but it looks drastic, but remember that bottom number is 300,000. So once you get this thing scaled out, you can see that the percentage change is not that much. Certainly not anywhere near 40 to 50% that you were told was going to happen. But the 7-day average is 495 and the 90-day average is 487.
Right.
And that's trending upwards.
Right, and that's not by a couple bucks. I mean, it is pretty substantial when you're looking at the size of a market. That's not noise, that is signal.
Here's another thing that I thought was really interesting. I'm going to put this chart up. This is median list price broken out by the quarters of the market. What really catches my attention is the blue one on top, which is the top of the market. The top, you call them the $1 million homes, but they're basically homes 700,000-800,000 and higher, right?
In our market, it's our luxury market.
Luxury market. They're going back up. The difference between, if you look back to all the way to the right, that little blue dot, it's up. It's up like $5 or $6 a square foot, but it's up and it's trending up. You can see the trend on this, that once it starts going, it goes up till a peak, drops off, it goes up, goes down.
So the reason I think that's important is because that section of the market is the section that took the biggest haircut. And so that section of the market showing recovery is indicative of the whole market. Because remember, the bottom three-quarters of the market really didn't do a whole lot as prices were less than going up. I think that they were more stable than anything else. But so the bottom three-quarters of the market kind of remained stable throughout the fall and the winter. But it was that top part of the market that really became very volatile, and that's where sellers were very disappointed. But this is definitely good news for those luxury sellers in Las Vegas that their prices have finally rounded the corner and are going back up.
Another piece of information that's interesting, just last week when we did this video, the median list price, that top was $999. It was we called it $1 million, right? It's $1,038,000. So the median list price is actually up 38,000. And anecdotally, are you seeing like more sales happen?
Yeah. So it's really interesting. Anecdotally, as you said, we've had listings that that have been on the market in our office for a while, and all of a sudden we've got these buyers that are coming back, and they maybe made offers that were low and they were rejected a few weeks ago, and now they've come back and they said, okay, we're ready to pay an amount that is acceptable to the seller to purchase this property. So they've had to come up in price. The seller didn't have to come down a whole lot. So it's really interesting. So the other thing is that we're seeing more multiple offers, which especially in the luxury market was not something that was prevalent for the last few months. So seeing multiple offers in the luxury market is very encouraging, actually, about the whole market, because seeing multiple offers on the bottom three-quarter of the market, that still occurred. That wasn't such a surprise, but starting to see them in the luxury market, that's very encouraging for the whole market.
I'm going to go back to this slide here. The market turned roughly January 20th.
Right.
Or within 45 days before that.
Right. So January 20th was kind of when, or the week of January 20th was when the data kind of solidified, so to speak.
Yeah.
But of course, those transactions were started, weeks before. So somewhere around 30, 45 days before, which is why, that video where I was saying that we won't know until it's already happened. That video happened to have been I think, sometime in November.
It was in November. We literally said in November, the title of the video was why the housing market may have already bottomed out.
Right.
Where Oana literally said it takes a while. We know that we did this in 2011 when we made the declaration the housing market had bottomed. We got a ton of pushback. No, 15% more. People talked about shadow inventory for 2 years, about the shadow inventory. The data's turned, the market adjusted, like we said. We said on a video that we thought over the next year there would probably be 60-40 markets that went down. But then if we looked out 2 or 3 years, it would probably be 90-10 markets up versus down. For sure, we said 5 to 10 years, we thought markets would be up. But everything right now is showing prices are going up in Vegas. And okay, Oana, this is the thing they're all hanging on to. But interest rates, Todd, the interest rates are interest rates. They're super high and nobody's going to actually buy.
One, historically, they're not super high.
Okay.
2, it's a snoozer. Nobody cares anymore. We've all gotten past that. People have very short memories, and that's not it's not saying something negative about people, but rather how adaptable people are. People are very adaptable. So because of that, people have gotten used to these interest rates, and they're making it work, which is a good thing. That's why we've survived as a species, because we're adaptable.
With 3,500 listings in all of Las Vegas, if we had 26,000 in the MLS in 2006, 26,000. Now that was the whole MLS. There were probably only 14,000 in Las Vegas at the time, but still 14,000 is a lot more than 3,000. Not only that, that 14,000, the city was 40% smaller back then. We're much larger. We need to have more listings on the market. That's the reason prices haven't collapsed. Doesn't really, interest rates aren't that big of a deal because 100% of all people aren't out there getting 100% loans. You know, the conventional wisdom or people are thinking as well, but if wages don't go up, who cares what wages are if you have cash, right? You don't really care.
Right. So remember, a substantial portion of the market is still purchasing cash. So it's not like everybody's subject to the interest rates. That's a very important thing to remember. So, and it's not just investors that are purchasing cash. People who are purchasing either primary or vacation home, they're still purchasing cash. And that makes a big difference because not everybody is beholden to interest rates.
And then the other thing too is all the people claiming the macroeconomic things, but Todd, the recession that's getting ready to happen, and we're supposed to have a recession last year, never happened. Then it was going to happen in the fall, never happened. It was going to happen now. Well, we'll see if it's going to happen. And the consumer debt and all this other stuff. Well, but look at the numbers that are happening in real estate right now. Like, all these people know this. And what are they doing? They're buying houses. They're paying more than they paid in January and December. They're paying more for the house in January, December today. And according to this, they're going to be paying more in March. They'll be paying more in April, in May, probably in June, maybe in July. It probably do the cyclical thing again. It'll start decreasing again. I'm sure the market crash videos will come out again this fall, the same thing. Interest rates are going to 20% and, yada, yada, yada. We have some other data. We're not going to share it on this video, but it's mind-boggling about investor purchases, historical trend of investor purchases. Can
I make a prediction?
Make a prediction.
There will be major market crash videos in April.
Okay. I think there will be.
My prediction is probably true for every month, though.
Yeah, every April. The market's going to crash. Watch. Well, yeah, what happens every year? Inventory increases. Average price per square foot drops for 5 to 6 months, and then it cycles up. But the cycle goes up in a curvy cycle. You've seen all our videos. You know this. But the imminent market crash in Vegas, absolutely not happening. It's home prices are going up. We said the best months to buy, October, November, December, January. We were absolutely right. Strictly, home prices were a bit less. They dropped 8% peak to trough. They're still up year over year, though. A year ago today, home prices are more than they were when all the people were making the 40 to 50% crash videos, and they're going up. Right.
So, did you guess January 20th? If you did, yay for you.
Yep.
If you didn't, thank you for watching anyway. If you liked the video, if it was interesting, if you learned something, if we entertained you, please like the video, subscribe, hit the notification bell, share the video, leave us a love note, be nice to each other in the comments, and we'll see you on the next video. Bye.
Bye.